Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq market site, we have Keith Pinder, CEO of Landon Capital, Mike Patrone, partner with the technology and life sciences practice at Goodwin, Francisco Morales Barron, he is partner with the M&A and Private Equity practice at Vinson Elkins, and joining us remotely, you have Daniel Friedman, global leader of transactions and integrations at BCG. We're here to discuss what's powering the next wave of M&A in 2026, the impact of regulations and tariffs, and how companies are strategically adapting to the environment. Gentlemen, it's great to have all of you with us. Welcome to Trade Talk. Certainly a lot to unpack here. Daniel, let's kick this off with you. It seems to be that the outlook for 2026 is improving. What do you think is going to be driving the momentum here?
Yeah, I agree with that, Jill. We are seeing an increased momentum going into the end of the year and into 26. And what's driving the momentum is that uncertainty has come down. There's more stability in the market, and we all know high uncertainty is the killer of deal making. So I think that stability, greater stability, is helping out. Also, interest rates are stabilizing, and there's continued discussion about the Fed potentially even lowering them more. When cost of capital goes down and is more predictable also, deal makers are able to finance those deals and move forward. And I would say the last thing is there's some really mega trends going on, especially around AI, that is kind of fueling and powering new M&A, both in terms of deal making, but as well in terms of venture funding and PE.
Yeah, and Francisco, those are some of the trends that you identified as well with energy and the data center plays.
Yeah, exactly. I think everything that Daniel just said is spot on, particularly on the certainty side. And specifically on the energy space, there's so much activity now, in part driven by the AI play, right? These AI data centers just require so much energy. And some people are saying, hey, this is a bubble, it's not gonna last. Let's see what happens. We're moving from a point in which the data centers were mostly training the AI, and hopefully we're moving into more of an inference stage in which the data centers are being used in order to use the AI. So the movement that we're seeing is like, well, how are we going to power this? How are the data centers going to continue to grow? And while like 5-7 years ago, data centers were a real estate play, today they're mostly like an energy play, followed by like maybe water in order to cool the chips, followed by the real estate at the end. So what we're going to see is like data centers first relying on gas, peaker plants, and then moving towards the nuclear powering of the data centers, or maybe already being on the nuclear stage.
Yeah, and Mike, let's talk about life sciences, the practice that you focus in. How do you think it's going to look for 2026?
We think there's going to be continued robust activity in the next year. Still top of mind is regulatory scrutiny. For the past several years, antitrust regulators have been concerned about innovation killing acquisitions, but there's a lot of confidence right now, both on the buy side and the sell side, that deals will still be able to get done as long as they're within the bounds of what's legal. And we're reacting accordingly. On the sell side, we're doing antitrust diligence on more early. On the buy side, there's more agreement around doing things like giving covenants not to pursue similar acquisitions in the pendency of the transaction, antitrust termination fees. So a lot of focus on maintaining robust activity, but still within the boundaries of what antitrust regulators consider to be acceptable. And there's just a lot of great assets out there. Big Pharma has a lot of cash on their balance sheet. Debt is relatively cheap. And there's been a tremendous amount of innovation in the last several years from all of the capital that was raised from 2020 to 2022.
Yeah, and Keith, microcaps and small caps, they have their own set of nuances in the M&A space as well.
Absolutely, absolutely. And I think that what's more important, telling that story more, right, is very important for small cap, micro cap companies today, more than ever. I think a lot of companies are using this prehistoric way of telling their story. They throw out news and put out news and hope it stick and hope the investors understand it. I think that what small cap companies are doing now is gathering more information as to how to tell a story, connecting with their investors in multiple ways, more than just put out news. And this helps them, obviously reach a greater market, right? More ears, more eyeballs, and increase their value.
Yeah, and Daniel, on the flip side, when we think about large-scale M&A activity, do you expect that to continue to rebound?
Yes, absolutely, Jill. What we've seen, excuse me, this year compared to last year is already mega deals have increased quite substantially. Last year, there were about 21 mega deals, $10 billion and above. This year, we already have seen 27, and the trend seems to continue. And there's several very big examples, especially in the areas we've talked about. Technology, Alphabet buying Wiz for 32 billion, Palo Alto Networks buying Cyber Arc, also in the above $20 billion. And then also in energy, Constellation, Calpine, and infrastructure, Union Pacific, Norfolk, and mining with Anglo Tech. So I think we're seeing a lot more trends of that. Everything I just mentioned before, interest rates coming down, more stability, giving more confidence to CEOs, CFOs, deal makers to do deals. And as long as they do their homework well and prepare, there's lots of value to be had in these large deals.
Yeah, and
sorry, just to add on that point, like it goes back to what Mike said about the regulatory framework, right? If there's an instance in which you always wanted to go for that deal, but you were afraid of how the antitrust authorities were going to look at it, now is the time to actually try to go for it, because you're not going to have a more favorable administration for you.
Yeah, and Mike, you were mentioning also that buyer diligence is deeper as well to help support these valuations.
That's right. Over the last year, I've seen the diligence process extend, both in terms of manufacturing, scientific, but also regulatory supply chain, in order to get comfortable on the front end, both that the deal makes sense and can get done, but also that buyers are going to be confident in their prices. And I think that's better for acquisitions generally. Even if you close a deal and the buyer finds out something later and doesn't have recourse, you want to avoid that type of situation. You want buyers to be confident in what they're buying and to be frankly happy with the deal, so that more M&A is follows after that.
Yeah. So it sounds as if the threshold for $1 billion and higher transactions is going to be somewhat the norm.
I think so, and that's, a lot of companies are staying private longer, raising a lot of capital. Over the past several years, I'd say if you were looking at multi-billion-dollar deals, those would almost always be publicly traded companies. But given the volatility in the IPO window, we're seeing companies stay private longer, raise more private capital, much bigger valuations, both in terms of what people think the underlying assets are worth, but also just, frankly, what the cash needs are for some of these businesses that are scaling very quickly.
Yeah. And Keith, you had mentioned before that telling the story and having investors understand what these companies are trying to achieve, part of that is execution as well. You don't want to have just a nice story to tell, you want to be able to deliver on that.
Absolutely, and going to the M&A activity, look, small cap, micro cap companies have always been R&D for larger companies, right? And that's very important. But the reality of it is you have to tell that story correctly and completely to be on the scope of these larger companies. And if you don't, we've seen, this year there's been a grim outlook for small cap companies, right? 46 bankruptcies, over 300 delistings, 400 reverse splits, right? And so the reality of it is, small cap companies have a responsibility to get out there and tell, if you're a biotech company, talk about really the science and what the science means and how, your patient population, talk about more about the patient population and get that information out there. So maybe a Roche, a Merck, that's looking for these novel science, can actually gobble you up.
Yeah, I mean, I agree with you there, because your thesis just can't be that interest rates are coming down and it's going to make the cost of capital cheaper. And speaking of capital, there's more ways to acquire capital than ever before.
Yeah, so as we were talking earlier, right, like you have access to the private credits. That's an easy way to acquire capital, right? You have like the private fundraisers. I think kind of going to Keith's point on the small caps and like how you need to keep order with them. What also we're going to start seeing more is like activists targeting like small and middle cap companies that historically maybe they didn't, in order to assert like some form of pressure and tell them like this is what you need to be doing and this is what you need to be focusing on.
Absolutely, and to piggyback off that, let's remember that small companies are the driving force of America, right? They companies with less than 100 employees, companies with less than 100 employees employ the most of the nation, right? They employ 49% of the population. So, it's very important that these companies continue to evolve, continue to seek ways to connect with their shareholders. And also by doing that, they raise their market cap. They find ways to, obviously bring more money into their company. And, every high tide raises all boats.
Yeah, and Daniel, let's think about the global M&A resilience perspective for a moment here. I mean, despite tensions and tariffs and so forth, 2025 was relatively a strong year compared to expectations.
Yeah, that's correct, Jill. The start of the year was not. If I look at the first, I don't know, 5 6 months, it was quite muted, given all the uncertainty we talked about with the trade discussions. But I think once deal makers adjusted expectations, and also I think all the doomsayers, it didn't happen, right? The economies didn't go to trash. The trade discussions did not actually affect. I mean, there's been more uncertainty, but they didn't affect everything. And then interest rates started stabilizing, and M&A is coming back in a big way, I think, in the summer and into the second half of the year. We've seen a lot more activity in Europe and North America. Asia has been hit a lot harder, except for Japan, I think, because the economies in Asia are so related and interdependent with trade. I think there's been less activity there. But Europe and North America have seen a lot of activity, and in North America in particular, with about a 60% share of the M&A market up to date.
Yeah, and Francisco, I think that companies have adapted quite well. They've been strategic about all the variables this year.
Yeah, I think the companies are doing a good job, generally speaking. And I think the biggest curveball has been and will continue to be is AI, right? And how are companies going to adapt to the new AI world? And even companies that are not AI plays still need to take into consideration how AI affects them and whether they can use AI in order to streamline services. So it's something that we will continue to see, I think, companies, their boards, their executives thinking about their AI strategies, how they will approach that issue, and we will continue to see changes in the market because of it.
Yeah, and Mike, certainly this year, the cryptocurrency and digital asset outlook, and not the outlook for 2026, but 2025 is definitely a big part of the story. What are your thoughts as we go into 2026?
So I think 2025 was a year of convergence of digital assets and capital markets. I think we're going to see more of that going into 2026, but also a lot of focus on what's the underlying operating business for a lot of these publicly traded companies. I think we'll see some consolidation, but I also think we'll see some very interesting assets come to market.
Yeah, I also think it's companies understanding what they're trying to be as well. I mean, we were talking about that off camera, Keith, that, putting a treasury company name behind your title doesn't necessarily mean, you have to understand what you're trying to be.
Absolutely. Look, whether you're talking about AI or you're talking about crypto, in a small cap space, you always have this wash, right? So as companies race to say that put this talking point within their news and within their company, you have this wash. When you're talking about AI, you got to think about it like everyone's using AI as a way of saying, hey, I have this value, but how is it applicable in your business, right? How does it make sense within your business? When you talk about crypto, we'll say, oh, we're doing this now. How does it bring more value to your business? And that translates to telling your story, right? Because what happens is, with this nuance of investors, they're calling BS on a lot of companies, and really when you have this hype, they want to find where the BS lie, right? And that's what happens. And so I think that what we're seeing now to the tail end of the year, you're seeing the wash where the valuable companies are increasing in market cap, and the other companies aren't, and so they're pivoting and saying, okay, who are we, and where are we going from here?
Yeah, I think part of it too is you're going to have to start to be able to justify your ROI. We understand AI creates efficiencies. Now, where are we extracting the value? I think companies might not get the pass as much as they might have.
No, there's something not going to get the pass, but I agree with Keith's point. You need to stay true to your values, right? You need to first assess who you are as a company and what are your core strengths and what are your core values, and then on top of that apply an AI strategy. And you need to explain to the market how it is that your AI strategy is actually returning on the investment. You cannot just say like, oh, now we use AI and greenwash it. By the way, SEC is going to be focusing on companies AI washing on their filings. So it is an exercise of knowing thyself in order to see how to involve AI more into your company.
Yeah, and Daniel, you had noted that PE firms, venture funding, and so forth are really attracted to the AI space. How do you think they're thinking about this once they're going to have to find a return on their investments as well?
Yes, absolutely, Jill. I was going to mention 2 points. First, on that question, I do think AI is going to radically, and already started radically transforming M&A. Actually, the process of evaluating markets and looking at adjacent spaces, evaluating targets. There are already like very effective tools that we use as well. That actually you can do the work of several weeks of a team that would used to do research, sitting in front of computers and looking at data, et cetera. That an AI agent that is well trained and well defined actually can start identifying adjacent spaces, potential targets, opportunities and challenges that come with those potential acquisitions, and really accelerate the evaluation of deals and increase the quality of the assessment. So I think private equity firms are going to be leading that flow in terms of using the AI tools, AI agents to evaluate, which I think is going to be very exciting, and it's going to accelerate further the quality of deals. And I think corporations are not far behind following with that. So I think that's going to be really transformative. And then the second point I was going to mention on AI is that I think we've gone from a shiny object that CEOs or companies want to mention to actually going to, as everybody said on the table, going to specific use cases that have real returns that you can prove, you can learn from, and you can evaluate. And in my discussions with my own clients, I'm seeing a lot more of that where companies that are successful are using it in a very specific ROI return case.
Yeah, and I think part of what's driving this is that the base LLMs, the models have evolved so much that like, I think in 2022 when we saw it, everyone was like, AI is going to change everything, and there was this like optimism of AI, but then no one knew how to use it effectively. But then now we have these deep reasoning models that are actually applicable and usable. So I think we're starting to see it more and more. And even if AI doesn't advance from where it is today, I still think it's going to be drastically change the environment. And then the other part, you mentioned companies, you mentioned private equity. The other side is activist hedge funds are also going to be using AI similarly to identify targets and to think about plays and to think about potential like carve out M&A plays and operational changes that the targets can do. So it's going to be pervasive throughout the ecosystem.
Actually, to touch on that, we partner with AlphaSense, and they do a great job, and do a great job actually utilizing AI to really shrink the time frame of when you're doing your due diligence, right? And pulling information. And what used to take a week now takes maybe 2-3 days, right? For analysts to kind of sift through information and pinpoint information to be more useful as to what they're looking for and their targets and driving through that information. So I think that helps with M&A as well.
And I would just add, one of the things we've noticed is it really helps with being thorough. So you might find that you only have a week to get a project done. How are you going to manage that time to be as thorough as you can with the help of software? You can really get a lot more done in that time.
Absolutely.
All right, appreciate everyone's insight. Thanks for joining us on Trade Talks, and thanks for joining me from MarketSite. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.